Beijing warned Friday it could enter a trade war with the European Union. The comments come as tensions escalate over the EU's new tariffs on electric vehicle imports from China. Germany's Economy Minister Robert Habeck arrived in Beijing Friday with the proposed tariffs high on his agenda. He said his country's strategy on China needs to be updated to include a longer-term plan and take account of Europe's approach. He further argued the strategy lacks direction on how Germany sees the medium-term relationship between the two countries. Habeck's three-day trip is the first by a senior European official since Brussels proposed the duties. The move led to countermeasures by China and harsh criticism from Beijing. This week alone, Chinese automakers urged authorities to hike tariffs on imported European gasoline-powered cars. The government also launched a dumping probe into EU pork imports. Habeck's visit is seen as an opportunity for Germany to explain the recent tariff announcement. It's also a chance to calm the risk of retaliation from China that could harm German businesses. Germany's voice carries particular weight, and its leading car manufacturers have opposed the EU tariffs. Berlin has urged dialogue while also expecting China to compromise. The country's car makers would be the most exposed to any counter-moves from China, as a third of their sales came from there last year. Chinese state media portrayed Habeck's visit as a chance to ease tensions. The state-controlled Global Times said Germany should look for consensus. Eurozone business growth slowed sharply in June. A key survey showed Friday demand fell for the first time since February, with the bloc's services industry showing some signs of weakening, while the downturn in manufacturing also worsened. The Composite Purchasing Managers' Index, or PMI, sank to 50.8 this month from May's 52.2. Analysts were left surprised, as they had expected the number to rise, though the index did at least hold above the 50 level, separating growth from contraction for a fourth month. Friday's disappointing number comes despite the European Central Bank delivering interest rate cuts earlier this month. June's data also showed inflationary pressures easing, strengthening the case for further reductions this year. The PMI for the currency union's dominant services industry fell to 52.6, below analyst forecasts. Manufacturing activity has been in decline for almost 2 years and reversed recent signs of a potential recovery. The factory PMI dropped to a sixth-month low of 45.6 from 47.3.